What's up, team? So just want to give a quick breakdown of the pound dollar trades I took, I think last week or the week before last now. I've been into this video for a little while. As you can hear, I've not been very well, so apologies, it's taken a bit of time, but I'm going to talk you through the setup that I took and why I took the setup and kind of what's going on here. And if you haven't done so already, guys, please make sure you have liked this video, subscribe to the channel, and pop that notification bell so you can be notified whenever I release new content. It's a huge help to me. Every time you comment for me, it grows my channel and helps me to get seen by more people. So I really appreciate the support. If you're enjoying my content, or if you even just like the way my videos look, do me a favor, like the video, pop a comment below, and make sure you subscribe. Thank you. Whenever I'm looking to trade, I'm looking to trade in line with the bigger players, and there's a few key things that I'm looking for in order to signal me into a trade. I normally want to start out with some sort of consolidation, whether that consolidation comes from below price and price is coming up into an area, so this might be a higher time frame supply zone, for example, and we're looking then for the chart to let's just recolor this quickly, 2 seconds, guys. Whether it be we are looking for price to come into a higher time frame area supply to create this kind of pattern before moving on its direction, or whether we are using this as maybe a simple continuation trade which could be traded kind of on its own. The theory is effectively the same. What we're looking for is a period of consolidation, a raid of that high or low, depending on which way it is, because if this was, of course, the other way around, it would be exactly the same, but it might just look like this instead. Raid, break, corrective return, and then off, okay? And the way we enter this trade is exactly like this. Once we've had a raid on the highs or the lows, we're looking for a break of structure in line with our hard time frame bias. Okay, so this might be coming up from like that. Okay, we're looking for a break of structure in line with our hard time frame bias, and then we're looking for price to come back into at least 50% of the last move. So what's happening here is this: the last up move before the push down, which raided the highs, that's the area where the big players come into the marketplace. Same thing here. Last down move, which raided the lows before the move in our general direction, okay, in line with our trend. That is when the big players come into the marketplace. And what we're looking for here is a return to this. And price will normally come and return to 50% of the area. And what we do is very simply, once we see this move happen, we just set limit order here. Once we've got that order in, once we've seen these three things occur, a raid of the highs or the lows, a break of structure impulsively in our direction, and then a corrective movement back into this area, we can then look at 50% of this last move down or 50% of this last move up, and we take the trade. It's as simple as that. So I'm going to talk you through these trades that I took last week on pound dollar. I'm just going to replay this back to here, just so you can see what I was looking at. I'm going to talk you through my higher time frame bias. So when looking at these zones and which zones I want to trade from, okay, all zones in my eyes are useful. This zone here, this is a low, this is a swing low point, and it did cause some minor breaks of structure. That is a minor break of structure, but it is only minor, okay? If we wanted to trust that this was going to go higher, proper high, we'd want it to break the last swing point, okay, which it is subjective. It could be here, but it's definitely not one of these here, okay? If we want to consider this to go long in the higher time frame, we want a major break of structure here, okay, and we haven't had that. So instead of me marking this as a major zone, which I'd mark blue, I'm putting it down as a weak zone. My expectation now is that this is going to get blown. Okay, so I'm starting to build a bit of story and indicating where price wants to go, okay? At that point, the daily low is here as well. So we've got a daily low there. Okay, so we've got a daily high here. This is on the daily chart. So this is our range, daily high range, daily low range, okay? And we had started breaking structures to the sell side on the medium to low time frames. Okay, we can clearly see that this market is now in a downtrend. Okay, so we've started to break structures. Okay, now the expectation here, okay, is that we're going to continue down. Why do I expect that? Well, we've got this weak zone that we'll aim as a target. We've got a higher time frame downtrend, which is still intact. Our daily range is on a downtrend, which is still intact. And the last push up that we had failed to break any new highs. So this becomes weak, and we're expecting these weak zones to break and these higher time frame or even lower time frames, these higher time frame zones to hold. Okay, that is a higher time frame strong zone. Okay, because that has broken a structural swing point. So there's different time frames, there's different things going on here. Okay, but that is a major breaker structure on this time frame. That is a major breaker structure. We've had these kind of moves up, and then we've started moving down here, and this broke structure, a major breaker structure in the time frame. So our kind of 15-30 minute time frame is now a sell bias, and all we're looking at doing is getting into the trade wherever we can. Okay, so I saw this setup appear. It's a really, really simple setup, and it repeats itself down the bottom, as you can probably see. Okay, what we're looking for is exactly what we drew out earlier. Okay, a raid on the highs. Let's get rid of this line because we know we're in a downtrend now. Okay, a raid of the highs. Really simple. A breaker structure in line with our higher time frame bias, and then a return to 50%. Now you can do a couple of things here. You could have done that whole move and you would have got in. I did the untested part of it. So if we zoom into this chart, what you can see here is this entire move up, which was the raid. So this was the raid here, this entire move up before the push down. Okay, we've had lots of liquidity building up here. You can see this. They are, yeah, they're equal highs, kind of. We have a bit of a wick there, but that's valid enough for me. Those are equal highs. So personally, I would say that anywhere above here is where we want to tag. There's liquidity sat above there. So if I then frame the last up move that's been untested, because in this, right, all of this has been kind of zigzaggy. We've had a push down, then we've had a push up. You know, we've got this liquidity sat above here. So really, I'm just going to frame what's been untested, and I'm going to take 50% of those. Now, I'm not sure what happened. I think maybe I got into the trade a little bit late.Maybe I framed it slightly differently. I can't remember off the top of my head. I didn't enter exactly on the 50%, but I should have done really. It would have been a lovely kind of 13% or 13R trade. But I'm here to be real honest with you guys, and the trade I took only ended up there. Okay, and what I should have done is seen this liquidity, but that was overnight. Yeah, what I should have done is seen that liquidity and taken it like this. So look, there's many ways to do this, and there's many ways to improve your trades, and it's always really good going into your trades afterward and kind of refining them. But you can see that setup, it worked out perfectly. Raid of the highs, a push down in line with our higher time frame trend. We then frame that move up, okay, whatever that move may be, and we take it on 50% of the entry. Do you know what it was? I remember now. I was flying on this day. I was flying home from my holiday, so I didn't want to miss the entry. I wasn't able to watch it because I was on a plane, so I took it on the safe entry. Okay, now down here, we've had exactly the same thing, okay? And again, these things, they repeat themselves over and over. Now, I did this one slightly differently. I'll explain to you why. Let me draw it out first, okay? Raid on the highs first. That's the first thing we're looking for. In a downtrend, we're looking for a raid on the highs. We're then looking for an impulsive breaker structure, okay? Breaker structure. And in these breaks of structure, you have imbalances left behind, imbalanced candles. We want these really big, long, impulsive candles. We then frame the last up move before the down move. Okay, and as you can see, I was pretty safe here taking the 50%. However, what I did see here was liquidity, and above here, equal highs. And these equal highs, they have a big habit of being taken and being swept. I wanted to make sure that didn't happen, so I framed my trade just above this Asian range and these equal highs. Now, I would have been safe, but it wasn't worth the risk of not getting it and potentially missing out on another 6R trade. So all in all, I held these trades all the way down. I took 9R at that one and 5R at that one. So 9.4, 9.4, sorry, and 5.5. So you're looking at the best part there of a 15R trade, which if you're trading at 1% per trade, that's a fantastic 15% on your account done in just a couple of days. That one was taken on the 18th of August. That was taken the 19th of August, so in a couple of days. So the key to trading is waiting for these clear and obvious setups to appear. Okay, the psychology of them is exactly the same every time you take them. Raid, break in your direction, and return to order. This is what you're looking for. This is how you enter them. And this is how you make the money in the marketplace. It's much better to be selective and take trades when the trades are right, rather than just trying to catch every move. You know, there's plenty of moves up here that I didn't get into. I could have done. For whatever reason, I didn't. I mean, there's another one here. And this is the thing. You'll see these things appear all the time. Look, there's another one here. Raid into a higher time frame supply zone. Okay, we've got a raid. We've then had a breaker structure sweeping these Asian lows. Breaker structure. We've then got 50% of the zone tagged almost perfectly. Okay, take that trade. Massive stop, admittedly, but you can see that how you can get into these trades. That's another 3R. You will find them all the time. If you have the higher time frame bias on your side, you will find these trades all the time. So if you've enjoyed this content, please do me a huge favor. Please like, subscribe, and comment below. It doesn't have to be much, but put your comments below. Tell me what you're struggling with, or just appreciate the video if you can. That'd be fantastic. Make sure you like and subscribe and pop that notification bell, and you'll be notified next time I release some fantastic content. Speak to you all soon. Cheers.